Well, we're going to get rolling here this week. The markets, it just seems like we're volatile, but, sometimes you really question if we're going anywhere. And we've highlighted in our reports, throughout the year where you get into certain time frames where the markets, can break out and you have to lean to a breakout maybe to a higher side or a lower side. And we talked about in the spring of the year, or if we do break out, it could be the higher side as we do have some potential weather issues coming up and so much uncertainty with the crop. Well, as we move into harvest, kind of the opposite is occurring as we're getting, towards the end of a weather market in here. And now the big debate is how big is big on the crop or how small is small, just depending on how you want to look at it. So, we are getting into a different environment in here right now. But let's look at a Dees corn chart here quick. We've kind of held over the last couple of months that corn's been range bound between 525 and 575. We've had a pushes above 575 and don't get too bullish there. On the other hand, when we broke down below 5.25, you probably shouldn't get too bearish. That range has really held. And today's low on Dees corn is 525.25. So, we think we probably should stick with this range in here right now. Again, though, we got to be cautious on a breakout. If it does occur this time of the year with harvest coming up, okay, it would probably be to the lower side. Again, that's something that can be debated out there, but we just want to go through how this chart is lining up. The one thing that really has our attention, though, sitting here today is this situation where we've got front month U.S. corn futures on the top chart and front month Chinese corn futures on the bottom chart. And as you can see, Chinese corn futures over the last 2 months have been relatively flat, just like the U.S. market. But it's important to realize that we've got Chinese corn futures sitting at the price level about where it was in mid-December of 2020. Now, if we go back to the top chart then here, in mid-December of 2020, we had corn sitting around $4.25 a bushel. So if we're just looking at U.S. futures and comparing them to Chinese futures and where they're trading at, you would have to lean more towards that we'd get a breakout to the lower side, okay, because that's what's going on over in this Chinese market. Now, we have seen some export business. It isn't as strong recently as what we had a year ago. And what we have in front of us right now is showing world corn prices as of the end of August 2020 compared to what they are right now. And as you can see, U.S. corn out of the Gulf was $4.28 a bushel in 2020. But more importantly, we were 29 cents a bushel cheaper than Ukraine offers, and we were 22 cents a bushel cheaper than Argentina offers. That led to increased export business of U.S. corn. The reason why our corn export pace is slower this year is right now U.S. corn loaded out of the Gulf is around 672. Ukraine corn's at 683. We're a little bit cheaper than Ukraine, but not the price advantage we were at a year ago. But Argentina had a pretty good crop, and they want to be aggressive in moving this inventory out. And you can see where their prices are right now, more than 90 cents a bushel cheaper than U.S. offers. That's why when we had some exports announcements, you're seeing some of this corn getting sourced out of Argentina. Again, we are competitive on the world market, and we are competitive when looking against Ukraine, and Argentina is going to be running out of corn here fairly shortly. And so it's not that we're going to lose a ton of export business in here, okay? But it's something we need to acknowledge why it's not as strong as what we had a year ago. As we get over to the bean market, we have the lines on the chart here, and we've shown this quite often over the last couple of months between $13 and $14. And what we probably should do here is lower that lower line down to $12.75. Probably shouldn't be rigid on this $13 to $14 area. It's probably more like in this $12.75 area. And again, that is holding support in here right now. Now, when we compare U.S. bean prices to what we've got going on in China, and we're doing that on this slide, the bottom market or the bottom chart is front month Chinese futures, and the top chart is U.S. futures. And as you can see, that red line goes back to January 1st for both of them. And right now we have U.S. bean futures and Chinese bean futures basically at the same price as they were at the year ago. So we made a bearish argument over on corn that Chinese futures are cheap relative, compared to where U.S. corn's cheap compared to where we were in January. But that's really not the case here on the soybean side of it. Now, when we look at the world markets, right now, a year ago, we had U.S. beans at $10.51 a bushel and Brazil beans were at $11.20. We are almost a 70-cent discount. Right now, we're getting some business because Brazil beans are finally more expensive than U.S. beans, as they're sitting right now at around a 35-cent premium. So we are getting this new export business coming in here. Now, to wrap this thing up, a big concern of ours is the spec position. Specs are net long 271,000 contracts of corn and 83,000 contracts of beans. If we do happen to go down, we can see some spec liquidation. On the other hand, the position on beans isn't so massively net long, where if we do have a bullish weather story come up, they could easily step in here and buy. Now, these next two comments are something where I don't want people to take personally, but I think what we got to do is really, really recognize what is happening this year compared to a year ago. A year ago at this time, it seems like, that producers are more, depressed, or an attitude of doom and gloom, and that this is going to be tough forever, and we just got to dump this stuff, move on, because I'm afraid if I don't sell it right now, I'm going to take less, January, February, March time frame. And so farmers were aggressive sellers of the grain. This year, it seems like the attitude out there right now is that this market can't go down, and that there's just so much optimism out there, and that farmers are holding the grain as they're afraid of selling too cheap today. Now, we're just bringing this up because the markets rallied last winter and spring because the farmers had sold a lot of their grain. This year, it's different. It seems like a lot of them plan on storing, saying, there's a lot of upside potential in this market. That's something that kind of really has our attention in here right now, and have to tell you that it probably will be a limiting factor in the market as we move ahead, the amount of grain that is sitting out in the countryside. These are just some things we're looking at here as we move into harvest. We'll see you next Tuesday, and as you begin harvest, stay safe.